All right, let's try this again. Let's see if YouTube actually connects to my live streaming software here properly. All right, I think we're good. Yeah, we're good. All right, we're live. So welcome back to Dapp University. So today, I'm sure everybody's been watching the crypto market since our live stream yesterday and saying like, hey, what's going on? You know, we're seeing cryptocurrency prices hit lows that I don't think, frankly, anybody really expected at this point. So we're going to talk about that in this live stream today. Like, should you be worried? Are we into a bear market? So we're going to break that down, analyze it, talk about the probabilities, you know, what I'm personally doing in this situation, some other factors that I think are affecting this market that a lot of people aren't really talking about, okay? So before we get into that, you know, if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to become a blockchain master step-by-step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. So last but not least, you know, this is not financial advice. There's nothing I'm saying in this video that's designed to tell you to buy or sell any cryptocurrency based on this information. You know, I'm not a financial advisor. I'm a blockchain developer. And there's lots of scammers down in the comment section below. It's insanely hard to, you know, police that stuff. There's almost nobody can do anything about it on YouTube. It's absolutely crazy. So just ignore them. I'll never give you my phone number or ask you to invest with me. All right. So we got a bunch of people in the chat in here. The chat here. So we got Devin, Culture Hives, Junior, Manny, Daniel, Andrew, Matthew, Nardia, Juan. Welcome. All right. So let's take a look at the markets here today. So yeah, there's definitely a lot of pain and blood in the streets. So let's take a look at the Bitcoin price here. Let me just pull up my screen here. And we see the Bitcoin price wick down to about just below $31,000. So actually $30,415. So that's bigger. That's what's over 50% off the all-time high. Okay, so this is a signal that a lot of people have been looking for to say like, hey, you know, as a top end, if we see a correction larger than 50%, then, you know, maybe we should be rethinking our, you know, thesis about what's going on with this market long term. Okay, so that's the first thing you have to take into account. That being said, we haven't seen a massive parabola in the Bitcoin price. All right. We also see people smarter than me who are better, you know, macro analysts, better analysts than me. I don't pretend to be a market analyst in this field, but people who are smarter than me are saying, hey, there's still money on the sidelines from institutions wanting to get into this thing, so they could see this as a dip buying opportunity. Now, that being said, I'm not telling you to buy the dip. I see a lot of people comparing this to the crash of, you know, March 2020, when we saw cryptocurrency prices tank about this price level, kind of correlated with stocks, which we're going to talk about here in a minute. I think the stock market's a big factor with what's going on right now. And a lot of people rushed in and bought that. They saw it as a massive opportunity. And those people have made a lot of money. But let me tell you why this scenario is different. Back then, cryptocurrency prices were at like historic lows, and it was even more low at that point. We went even farther down. Okay, so that was a huge dip buying opportunity. Of course, it's always hard to know when you're in the middle of it. But talking about the risk reward here, like if you're trying to like talk about buy the dip at this level, like the prices have a long way to fall compared to where they were a year ago, and it's not quite the same as when it was in March 2020. So that's what I would say. So we can also check on the ETH price and see what happened there. We of course are also, quite a bit off the all-time highs here. So we went to $2,093, which is over 50% off the all-time high of $4,356. Lots of other cryptocurrencies are down as well. So, you know, does this signal like a multi-year bear market or something like that? Well, the truth is nobody really knows for sure. And it will take time to tell that whether, you know, it is truly a long-term bear market or not. I think the probabilities here of us seeing a bear market that was as bad as the last one, I would think have decreased, especially for more major cap coins, because, you know, basically we have more adoption, we have more participants in the space, we have technology that can actually make the cryptocurrency useful rather than just pure speculation. For stuff like Ethereum, for sure. So that's definitely something to think about. The other thing is when we hit a top last time, it took a long time for us to actually see clearly that it was the top. Okay, it wasn't just like we corrected and then, you know, everybody's like, okay, that's it, pack up, go home. It took us like a month to kind of realize what had happened. So that's the other thing I'll say about this is we need time to tell whether this is a top. So, what am I personally doing about this? What somebody asked me in the live stream yesterday, like if because we've been kind of talking about this before. It's like, hey, the prices they keep going down. What am I personally doing? Well, so what I'm personally doing is not necessarily what you should do. So you have to understand that first, because of, when I bought in, the amount I have invested compared to what I need to actually impact my life. So at these levels, like me personally, I believe in this stuff for the long term, and I wouldn't sell at this price level because the reward of selling at this price level, greatly outweighs the opportunity cost of holding long term if the market continues to go up. So, part of that is saying that long term here, nothing has changed. Do I still think Bitcoin and ETH are going to crazy high price levels compared to where they are today? I definitely do think so, but it's going to be, you don't know what the road to getting there looks like. Okay, we could see these crazy corrections happen again. They're going to shake people out. The last thing I want to do is wait for this market to draw down even further and further and further and then sell then. I mean, most people getting into crypto, they buy high and they sell way low. So for me personally, that's what I'm doing in this situation is pretty much what I have always been doing, which is just nothing. So let's talk about factors that I think that are affecting this that a lot of people aren't talking about, okay? Because, of course, we saw the drama with Elon Musk. We saw, lots of different things happen that people are saying, oh, this is the reason it's dumping. We also talked about, the U.S. tax deadline. Okay, we see sell-offs around U.S. tax deadline quite a bit as well. Another thing I want to talk about is the stock market, because we're seeing a lot of correlation between stocks and cryptos in terms of just the direction that they're going. Not necessarily the magnitude of the moves, but definitely the direction. So we have seen the stock market not do so hot as of late, okay? So I do think we're having a big impact on that from the cryptocurrency prices right now, particularly with this sell-off. I think we're seeing a perfect storm of, the stuff that happened with Elon. We're seeing a lot of leverage blow-ups too. I'll talk about that in a minute. The U.S. tax deadline, and then also what's happening in the stock market, which, can be impacted by, taxes as well, all that type of stuff. But I mean, crypto does not exist in a bubble is what I'm trying to say. It doesn't exist in a bubble from what's happening in the, global economy. We can check what's going on with stocks here. So like, the S&P over the past, 5 days, month, it's not looking so hot, right? If you look also at like the Dow Jones, any just kind of index that gives you an idea of what's going on with the stock market, it doesn't look good either. Okay. So crypto does not exist in a bubble, and I think what's happening with stocks is having an impact of what's going on in the crypto markets right now. There's also just a lot of concerns about the health of the overall economy too. You know what I mean? Unemployment, fears of inflation, all this type of stuff. The kind of bumpy ride, the volatility that we've seen just throughout the world over the past year. There's a lot of concerns with that type of stuff. And I think, crypto doesn't exist in a bubble. It's affected by all these things. So let's just see here. I feel like I have one more note about something I want to talk about with this. Yeah, it's the liquidations. So I don't have the chart to pull up the liquidations here, but we've seen an insane amount of money liquidated over the past several days. Okay. So I think I have a thesis on why, or a hypothesis, I should say, on why this is the case. So basically, I think what happened is basically the cryptocurrency prices went down a lot, and then people thought we were at a bottom, okay? And they started taking out leverage to buy more cryptocurrency at that bottom because they were anticipating the prices going up, all right? And then basically, when we thought we were at a bottom and it wasn't bottoming, it goes down further. People are just getting liquidated like crazy. That's one thing. The other thing is people just taking out leverage along the way and setting in their liquidation prices really low. Okay. And then basically, they didn't expect cryptocurrency prices to fall to this level. And when it fell to a level that nobody expected, then you just see lots and lots and lots of liquidations. So a lot of leverage has been taken out of the market, which can be healthy if we're going to actually, continue to raise higher than this long-term bull market. But yeah, that's another factor when you see prices blow up like this. You see leverage basically being cleaned out of the market. And so it could be a perfect storm of all these things that could take us down to price levels that nobody expected, and then we could see the Bitcoin price support a correction of over 50% and then continue to range higher. So those are my thoughts on the matter. Those are the factors that I think can impact this. So on a lighthearted note, I'm going to show you something that I saw here. I don't know if anybody ever remembers the video of Charlie Bit My Finger. Some people may be like way too young to even remember that. But there's an NFT drop of Charlie Bit My Finger that's releasing here. I'll find the link. I think it got lost off my note sheets here. Sometimes my notes get messed up when I do these streams. I try to I see stuff throughout the day and then I store it in a note to talk about the next day, and then it gets lost. All right, let's see here. Okay, here we go. So basically, Charlie Bit My Finger is being auctioned off as an NFT. So this is a video that got really popular. It's been over 10 years now, I think. It's been absolutely crazy. And so this video's been viral on YouTube. Let me see how many views it has. I want to say it's almost like 100 million views. It's absolutely insane. But I saw the news that basically they were talking about taking this video actually off the internet. So whenever it's purchased as an NFT, then it would no longer exist on YouTube. And so people are saying, hey, don't do that. That's crazy. Keeping the video up is actually what gives it value. Let's just find it. But we're starting to see experiments with this with NFTs. What can you do with them? What are people willing to pay for? Will they use them as rights for media that are out there online? And we're seeing some strategies about how to do that. So let's just take a look here. So this is the video. Yeah, that's awesome. So I hope that's a nice little lighthearted palate cleanser for all the pain that's been going on in the markets right now. But yeah, so basically they're taking this video and selling it off as an NFT, and then basically the person who ever owns an NFT now owns this video. They're talking about taking it down off YouTube. But it's I mean, if they take it off YouTube, it's still gonna exist other places online. People can go look at it. But it's got 881 let's see here. Yeah, million views. That's absolutely insane. getting close to a billion views. So it's like a perfect video. And this was, back in the early days when this is 2007. I mean, this is a crazy old video. It's it's basically 14 years old. Some of the original viral videos, and for good reason. I mean, it's perfect. It's just these cute little kids, and then the interaction, you couldn't even script it to be that good. It was just organic, and somebody caught it on camera. Kind of reminds me of back in the days of America's funniest home videos. All right, so another thing that people were talking about yesterday. Well, actually, one important lesson here with what's going on with the crypto markets right now is when, basically you see this sort of panic and all this activity, you start to see sort of the problems with, centralized services in some ways, where basically you have people that are trying to get out of their positions on centralized services, and some of them are just not letting them do it. So we talked about this before, the pain of centralized exchanges. Sometimes you'll sell and they won't let you withdraw your funds. They'll just suspend withdrawals. They'll let you deposit, right? They'll suspend withdrawals from your accounts. Sometimes you'll also see the type of thing where the services are just down, right? You just can't even access them. But that's another benefit of decentralized exchanges is basically, the website to your decentralized exchange could go down. But the smart contracts are not going to go down. The connection to the blockchain is not going to go down. Now, there are, of course, other bottlenecks in there for sure. Maybe the access to your node, maybe you exceed your rate limit on that, something like that. Maybe you can't get on Etherscan to interact with smart contracts directly, and you have to be a experienced coder to actually interact with it in a reliable way. And of course, the gas fees can go up like crazy during these times, as we've seen, and you have to pay a lot of money. But the important point there is you can always access it in some way. When it's not necessarily true if you have a centralized custodian who's just saying, well, we're the gatekeepers for your money, and if our services go down, then you can't access it. That's still kind of a bad failure point in a time like right now when some people are trying to say, hey, I want to get out of the markets, and I can't. I just actually can't do it. So that's another big benefit of decentralized tech that you can see the value proposition of right now, because it's alive, it's real, and people are in the middle of it and feeling the pain. So we're talking about like, bullish catalysts, potential bullish catalysts over the long term for sure. Because like I said, I think nothing has changed big picture for the long term in terms of these markets. Now, short term, we definitely can see some pain. Like, I'm not going to sit here and try to tell you that we're not going to enter into a bear market because I don't know for sure. But long term, we went through a bear market, between 2018, 2019, and look what happened today. I mean, people who helped that entire thing or accumulated through that entire thing have been greatly rewarded, even though Bitcoin has dropped by 50% off its all-time high. So bullish catalyst for the long term here, when we're talking about proof of people kind of getting into this space. So Kathy Wood from ARK Invest, basically, who's long on ETH holdings for sure, and other cryptocurrencies as well. But ETH, of course, being one we talk about a lot in this channel. So basically talking about holding through the Grayscale Ethereum Trust. So let's see here. Let's just pull up this article. Kathy Wood's famous Tesla bull as well. Let's just see if I can. It won't let me read this article without the ad blocker or without subscribing. Let me see if I can find it. Okay, so I can't actually read the article, but we'll just read the headline and get the gist from there. So Kathy Wood's ARK holding Grayscale Ethereum Trust filings show. So this is actually based on their real filings. Bullish on Ethereum, Bitcoin, and other cryptocurrencies. So I can't read the article, but that's the main point. So those are examples of other people who are bullish in this space long-term, have put their money where their mouth is, and you can actually verify it based on their filings. So another thing about liquidations, we talked about it a minute ago. People are taking out leverage to try to long what they think are bottoms, and then the bottoms aren't there, or they just have been taking leveraged positions with a really low liquidation price that we thought we'd never reach, and we've reached those prices. Okay. I made some videos on this. I never try to give like financial advice and say, hey, you need to do this. But I'm always okay with telling people be careful. I think leverage is a terrible thing for most beginners to get, involved with. And you're seeing why. And part of the lesson to be learned here is if we are in like a seismic shift in how the world adopts new financial-based technology, and this is a massive opportunity to just buy and hold the really quality stuff, then like you can totally lose your seat on that rocket ship by like messing with leverage and screwing that up. Because think about the opportunity cost. Like most people are gonna get absolutely wrecked with leverage. And if you try to use leverage to make some short-term gains and all you had to do was hold to get long-term gains on one of the biggest like technological shifts in a millennium as for financial technology, then like it's just not worth it. Talking about risk reward, it's just not worth it. That's how I view it. Somebody says, be careful, not financial advice. So that's what I'm saying. I'm not going to give you financial advice and say, buy the dip, because we don't know if this is a dip. I'm not going to say, Bitcoin is definitely going to go to $100,000 like this year. Like it's about probability. It might not. You know what I mean? But if I'm saying be careful, that's different. I'm okay with doing that. So let's see here. Got other questions in the chat. Somebody says never sell in red market out of stress or panic. Yeah, totally. So it's great to not ever make decisions based on panic. Of course, it's impossible to never feel emotion when you make a big, important decisions like this. Like I'd be a little bit worried about you if you felt no fear of any kind. But it is important, like this person is saying, I think it's a good point. I've mentioned this in my channel before, to like at least try to distance yourself from the emotion that you feel whenever you're gonna make the decision, and always try to plan what you're gonna do in the future and then stick to it. Now, the future doesn't have to be a month away, because crypto moves so fast. You can't say, oh, I'm gonna sell, but I'm gonna wait a month. That's not what I mean. I mean, it could even be wait 15 minutes. Just go outside, take a break, get some fresh air, do some exercise to where you at least reduce your stress. So here's a really important lesson that I have learned over my life. So you could say it doesn't matter, like the outcome is still the same. If you sell, it doesn't matter if you felt better or not, the outcome's still the same. Yeah, but if you have two outcomes that are roughly the same, but one makes you feel better, like which one would you rather choose? So I leave that question back to you. I would personally rather choose the one that I felt a little bit better about. Now, like I said, you don't want to wait forever and the prices absolutely tank. That's a time when cost of waiting would be too high. Somebody says Bitcoin falls further as China cracks down on cryptocurrencies. Yeah, we've seen this happen a lot. That's the other thing I didn't mention with the factors of this market. We've seen a lot of FUD kind of come onto the scene. FUD has definitely been, a major part of what's going on, I think. We've seen this happen in the past where China bans Bitcoin, bans cryptocurrencies. And I say ban, they talk about, just big crackdowns. Not always like outright bans for sure. But we're seeing that happen lately as well. We've seen fears about regulations, all that type of stuff. It's been a perfect storm of a lot of different things. So what's my view on alts? So they put alts in all caps here. So I think that they're talking about like just altcoins in general, or just like, I'm going to consider that like smaller cap cryptocurrencies like that aren't, Bitcoin. So basically like the alts honestly are like kind of the scariest things to hold on to when you see these major price corrections because of their market cap. So when the market cap when the prices go down like this, typically stuff that has a smaller market cap can move down in price a lot faster. Okay. I've talked about that a lot on my channel. You see people getting into riskier, lower cap stuff. That's one of the reasons I don't really hold much of it, is because you never know when the music's going to stop and everybody starts rushing for a chair, and that person who doesn't get a chair gets left out of the game of musical chairs. That's kind of what's going on with cryptocurrency markets right now. So when you're like in really small cap stuff, like when last bull market, we saw some of those projects draw down by like 98%. Okay, and some of them never recovered. All right, you can see plenty of charts that went down like this and are just completely flatlined and have not ticked up at all since the last, bull market top. And that's why I always say you can't be systematically like greedy when others are fearful and fearful when others are greedy, because you would buy every coin that ever went to zero, and a lot of them basically went to zero and haven't recovered. So, yeah. And that's another reason I've been such a big believer in ETH and, haven't, gone out to riskier stuff that don't have the same adoption that ETH does, is because when the game of musical chairs stops, I want something that is a much stronger bet long term. So somebody says, can you talk about EIP 1559? So the chat just moved on me here. And I think it said something about like, I lost the chat because it moves so fast. Basically, can you talk about EIP 1559 and what does that mean for the bull run? So this is a great point. What do we think about? So like I said, fundamentally for me, long term, nothing has changed. The value proposition of something like the Ethereum network is basically getting greater and greater and greater by the day. All right. Now, you could argue that the price that we've seen for Ether lately has been an overvaluation of what the network is capable of. I would even say, okay, that's fine. And maybe the prices come down to maybe get something that's more of a fair market value. It's really hard to tell what the fair market value of cryptocurrencies are in the first place, where people are still coming up with models to determine that type of thing. We're trying to come up with frameworks about how to think about that type of thing. So that being said, long term, there's so much stuff that's so many more value propositions for the Ethereum network that are just getting greater and greater by the day. And we're going to see big leaps forward in that in the coming months. And that's one of the reasons I say long term, fundamentally, nothing has changed for me. EIP 1559, where ETH is going to start getting burned whenever transactions are sent, actually affecting the supply of ETH. It can be deflationary at times of peak economic activity. So when you combine that with like roll-up technology and layer 2 scaling solutions, where people are going to start using the Ethereum network more and more and more, okay, because it's cheaper to use, the activity is going to go up, and then that is going to cause ETH to get burned. If the activity is up enough, it could be deflationary over long periods of time. And assuming that the demand for Ether stays up, then basically, you have a perfect storm for basically appreciating price of ETH. Now, the demand side is where it gets tricky, because if we go into something like a bear market like this, then the demand can definitely dry up relative to what it is now. Okay, I'm not saying that we're going to like to zero. I don't think that we're in a scenario where that would happen. But we just the EIP 1559 thesis that's going to impact the price of Ether is under the assumption that the demand for the asset itself increases, and you could see the demand kind of like start to dry up if we do enter into some sort of bear market. Okay, there's lots of these markets are much more sophisticated than they were 5 years ago. We have a lot more sophisticated tools to short markets. So if there are people who think, oh, hey, we're in a bear market now, there's lots of sophisticated investors who will short it into the ground. Okay, and that you're working against those people. So that's sort of like opposite demand for ETH. That being said, long term, let's just say we do enter into a bear market or something like this. We got a lot of time to ship some really amazing stuff for the Ethereum network. We got rollups, scaling, ETH2. I mean, if we do, it's going to come back with a vengeance. I'll put it that way. That's another reason why I wouldn't sell anything, me personally, at the current price levels, even if we continue to go down from here. Because, I know what's coming. I saw what happened like last year in DeFi summer before everybody was here, back when Ether was $200, and we were like yield farming and making explosive gains with DeFi, and the world hadn't woken up and realized that that was the case yet. Okay, and if we see a similar thing happen within the next 3 to 6 months, and we're sitting here like making lightning fast transactions on the Ethereum network for relatively cheap, and we're doing yield farming again, we're doing all this type of stuff, then that's going to have ripple effects to draw in outside eyeballs, and that's why it's less likely to me that we're going to be in a bear market. And if we are, then I don't think it'll be quite as dramatic as the last one. So if you got any other questions here, they say Matic. Yeah, Matic's been doing well. So somebody says Tether. Yeah, Tether's potentially another factor with this. People talking about Tether backing not being as not looking as good as they think. So is it worth to stake now? So if you're talking about ETH, so the problem with ETH is basically like if you do ETH staking right now, you're moving your funds to the ETH1 beacon chain, and you can't get it back until the merge happens. So basically, you're locking up your ETH for an indefinite amount of time, an undetermined amount of time, and we're going to be subjected to a lot of volatility between now and then. So for most people, I think it's better to wait. I think staking is for high conviction long-term holders right now. So what I think about decentralized cloud computing on Ethereum, I mean, we already kind of have that in some ways with smart contracts. Now, people talk about this because they're like, hey, we want to rebuild AWS on blockchain. We'll kind of get something like that, but it's going to take time for that technology to really mature and that use case to be really solid value proposition. We have a ways to go before Web3 has the same level user experience as Web 2.0. But DeFi still always offers a really solid value proposition before that particular use case can be as competitive as Web 2.0. It's a lot easier to compete with the financial system, in my opinion, than it is just the user experience of consumer-facing web applications in terms of like speed, all that type of stuff, data storage, all that type of stuff. Because the thing about it, the reason I say that is because when you compete with finance, you can offer benefits that the financial system can't currently offer. Even if you're compromising speed and user experience, the benefits still outweigh the cost. Because if you can basically tell people they can get like 50% APY on assets, it's really hard to do that. You know what I mean? In the traditional financial system. And And you can do it with blockchain technology, even if it's like a clunky user experience and it's slow and it's kind of expensive. Like the benefit still outweighs the cost of doing that. So that's what I mean by it's easier to compete with the financial system than it is like Web 3.0 versus Web 2.0. The benefits of Web 3.0 would be like censorship resistance, trustlessness, all this type of stuff. Most people don't really care about that too much. And the user experience of building everything on Web 3.0, where you don't use anything that's related to Web 2.0, we've got a ways to go before we can compete with Web 2.0 in that regard, in my opinion. So, great questions. That's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. You know, if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You can find any of my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, actually become a blockchain master step-by-step from start to finish over at dappuniversity.com/bootcamp. All right, you don't have to be an expert to get started today. Help people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. That's the next time. Thanks for watching Dapp University.